Today's video is straight out of my reader mailbag. I had multiple people write into me about this interesting dividend payer. Its products are consumed by 97% of American households, and its trailing 12-month yield is a whopping 10%. Adams Foods started in 1957 as a feed delivery service outside Jackson, Mississippi. A year later, it added a chicken farm on leased property. By 1963, it had expanded into the world's largest egg producer. In 1969, the company merged with Dairy Fresh Produce Company and Maine Egg Farms. The resulting company supplied eggs from California all the way to Maine, thus Cal-Maine Foods, ticker CALM, was born. The company remains the largest egg producer in the U.S. Over the past 2 years, the company has moved into the prepared food markets through a strategic venture with Crepini Foods and the purchase of Echo Lake brands. Cal-Maine is launching a $15 million expansion and optimization project at Echo Lake Foods. The company sees its future growth in the consumer demand growth of high-protein, ready-to-eat convenience meals, alongside the stability of the conventional egg market. The company's latest earnings call on October 1st was its first to be held live. This is part of a new effort to provide transparency to shareholders. It was also the strongest first fiscal quarter in the company's history. Net sales were $922.6 million, up 7.4% year over year. Broken down by segment, conventional shell eggs, $505.9 million, up 4.4%. Specialty shell eggs, which includes cage-free, organic, brown, free-range, pasture-ranged, and nutritionally enhanced eggs, was $283.5 million, up 10.4%. Prepared foods, including pre-cooked egg patties, omelets, pancakes, and waffles, up 839.1%. Those latter two segments are expected to fuel Calm's growth into the future, and the numbers are already showing evidence. Gross profit for the quarter was $311.3 million, up 25.9% year over year. Diluted earnings per share of $4.12 was up 34.6%, and net income of $199.3 million was up 32.9%. Net income is going to be the most important number here for dividend investors. That's because Cal-Maine pays out 1/3 of its quarterly net income to its shareholders. This is not an estimate, this is not a guess, it's a hard calculation done at the end of the quarter. And if you're considering adding Cal-Maine to your portfolio, this formula might be your deal breaker. Here's a look at the last 10 years of Calm's quarterly payouts. You can see it's all over the place. And if the company reports a quarterly loss, no dividend is paid. This hasn't happened since the January 2022 payment. But you can see October 2023's payment was so low, just 0.6 cents per share, it barely registers on my chart. Even in the last year, the quarterly payments have ranged from the recent $1.38 to April's $3.49. The great part about an income-based dividend strategy is the company is always going to have a desirable payout ratio. It's not going to pay out more money than it has or use credit to pay its shareholders. The rub is that the dividend changes every quarter. And even though Cal-Maine has had a very successful year, we don't know if that's going to repeat in 2026. It's also important to keep in mind companies in a growth mindset tend to invest more money back into the business than leave it sitting on the table to pay out to shareholders. Eggs are a great example of a consumer staple that Americans are going to consume no matter what's going on in the economy. And if Cal-Maine can keep its momentum of prepared foods into the future, it could be a great investment. But if you're going to invest in Cal-Maine, make sure that you're not trying to pay your bills with those dividends, because with the variable dividend policy, they could be all over the place.